The demand, oil demand, is increasing. The market is still very strong, and the refining throughputs are, let's say, at maximum levels. We have a little bit of not a little bit, we have a bottleneck here because a lot of refining capacity before COVID and during COVID is being shut down, and new refining is coming in, but is not matching the reduction, let's say, on a timely basis. So, China is not using the full capacity of their refinery because they claim that they are consuming less due to COVID, and they are not increasing the use of their own refineries. So we have a bottleneck in the refining system, but this tells us also that the demand keeps being very strong. And I would say the demand, as you remember in the past calls, we always said that the fundamentals were there. Of course, the Ukrainian war accelerated the system. The product inventories are very low. We are under the 5-year average. So even if we have a little bit of a slowdown at a certain point in the market, you have the restocking effect, which should should increase the demand anyhow. The vehicles, they hit the road again. We are still in a very strong driving season in US and in Europe. Of course, the US is driving more gasoline demand. Europe is driving more diesel demand. Jet fuel is rising. We have a cap on the jet fuel due to more operational problem than real lack of demand, because as you know, we have a total chaos in the European skies, and this is limiting the number of flights which they could fly today. And we have a lot of also strikes going on. The long-term demand is there, and the participation of refined products, the share of it to the total oil seaborne trade it increased a lot over the last decades. And the change in the refinery landscape is basically most of it happening far away from the consuming markets. So it means this is a stronger demand effect on tankers, on our tankers, on product carriers. The U.S. shale oil is coming back slowly because it's mostly in the hands of the private companies, but it's coming back, and it will be the share of it, of the future increase of oil production would be mostly out of U.S. Talking about demolition, we have a lot of, forces pushing a possible increase of demolition of ships. Next year we have 2 indexes coming out to rate our ships on the emission that they emit, and this is going to create, one, of course, a reduction of speed, which of course creates a reduction of supply, and second, a lot of older ships will be non-economic to run, and I think we will go for a scrapyard. The pool of demolition candidates is growing. The yellow line are the 15 years old ship. 15 years is a commercial limit. It's not a technical one, but it's a commercial limit where the first class oil companies, they do not charter ships anymore. And 20 years, of course, are the ages where you start thinking of scrapping your fleet, your ship. Of course, the demolition grew a lot recently because due to COVID, all the shipyards were closed, so they are restarting, and they have quite a number of ships in the backlog to scrap. The new building orders are highly limited, I would say close to nil. This is due, number one, the fact that shipyards are full up to 2025, and this is mostly due to container vessels and LNG carriers, which have been filling the yards everywhere. Secondly, today we have a problem to understand the future fuels for our ships. So the technology, even if it's there are various types of technology there, but we still do not know which is going to be the most common one, the most manageable, I would say, one in the future. So ship owners are reluctant to order new vessels due to this technology limit. And on top of that, the new building prices are by far more expensive than the second-hand ones, of course, on a parity. And then you have a lot of second-hand activity, but not on the new building one. And all this is creating a very low growth, close to nil. Maybe in 23 we think of a net fleet growth which is not even touching 1%, when the demand will be by far higher.